Audio morning brief for the U.S. grain market, 7:43 a.m. Eastern Time, January 18th, and Rich Positive Critical Point. Corn market didn't do much of anything yesterday other than it went to a new low for last year, this year. But it was just kind of like a lazy push lower, and they didn't really follow through. Nobody panicked. And this morning, the overnight market's trying to bounce a little, but mostly just resting. 5-day average is nearby resistance. Daily highs are nearby resistance, so funds might just continue to sell, but it almost acts like the market's kind of tired of going down. Now, yesterday's price action came close to the lowest side of our price objective of in the 437 area, so that could be support, and the market's oversold enough. However, the model is saying we probably will not see the level 3 bottom until next week. And so there can still be additional selling, but I'm leaning towards the idea that the model can be right, that there ought to be limited downside here. It's quite possible the market just coasting into that level 3 bottom and bounce a bit next week. So again, I think we start seeing some positive days. We probably got a level 3 bottom, and those type of traders will see how well they'll push it. But as I'll explain in the weekly update later today here, there's still downside potential right into February. That this level 3 bounce coming is just that. And I don't even know if you want to count a bounce. It could be just a knee-jerk reaction. But at least there's signs that the selling is slowed a bit at least, and the demand still has not picked up. You're just starting to find an equilibrium where you got the same amount of demand day after day after day, and the selling is backing off to start to match that. So in theory, price ought to stop going down, but it might not be able to go up. Now, for the March soybeans, it is testing last week's low. It's trying to act a little buoyant. I'm thinking chance for a double bottom. I'm thinking it bounces next week, something similar to the corn. Other than I just said the corn probably would not bottom until next week. Well, there is a chance beans are bottoming today if they didn't bottom for level 3 last week. I'll just have to watch it here. I'm still hopeful it respects last week's low for those larger trends for a little better rally in coming weeks here. But again, it looks like all 3 markets can have problems into February, and some may have problems into March, and I'll explain that better with the weekly update. So I don't see a whole lot here on the beans as well as the corn. It ought to go up, and that's all I can tell you. There's not an exciting bullish story coming out that I can see. I don't think there's much chance for surprising news. And we technically, all you can argue is it's trying to forge a bottom, but hasn't given us any sign that the demand is really stepping up. Need a few up days, need to take out daily highs, need to close above 5-day average, and then maybe we can reevaluate whether it's all over as fast as it began, or can it finally get some traction and do something more to the upside. Now, for downside potential, if it wants to take out last week's low, I would target every 5-10 cents lower until we can finally find some level that excites someone to do more buying than selling. And then let's go to the March wheat. And as far as upside, I can see beans making a 20-cent bounce, but got to take out some resistance, got some work here to do. Now, in the wheat market, that's a fascinating one. The problem is I got too many multiple forecasts going on here. Probability's low to actually forecast the bottom. But just visually looking at it, not paying much attention to what the model's doing, I would say wheat really ought to bounce by next week, and it ought to start that bounce now. Okay, so I'm looking for a level 3 there, bottom on my 2 cents worth. As far as the model is concerned, it's saying, yes, that's a possibility, but unfortunately it's showing there's alternate scenarios when the market can go lower next week as well. And I guess if it were to bounce today, some people might be concerned you got a consecutive 3-day bottom. I don't know if that's bullish or bearish or not. Don't know if I've ever dealt with such a thing. But if it were to bottom right now, that's kind of like what we'd be looking at. I would be encouraged that if the March Chicago wheat can trade in just the next few days above 595 and 3/4, then I could think it'd add to it for a few additional days. But keep in mind, even if it bounces next week, the longest I see is it could bounce into the end of next week, and the following week would be down normally for level 3 anyways, but it should be down for those larger trends. So again, it's looking like any kind of major bottom here is a ways off for corn and wheat. Soybeans may have placed a major bottom, but if it takes it out last week's low in the next couple of days, then the more important bottom for beans is not until March, but it should still bounce. Like all three markets, you can come up with these additional bearish selling in February, March, but at the same time, all three markets are due for some kind of bounce in February, and they could start that soon as we wrap up January. Other than that, not a whole lot to say. Probably wasted your time here. I just don't see anything going on. It's, as of this morning, it's just status quo. But it's still setting up like these markets deserve a breather. They deserve at least a knee-jerk reaction higher. Past results are not necessarily indicative of future results. Have a great day. Thank you.